Check, please.
Hey guys, welcome back. We always love when stocks fall dramatically. Maybe they've come into our value investing sweet house. We're going to talk about 3 stocks right now: PayPal, Square or Block, and Twitter. These all have fallen dramatically over the past year, and we're going to look at the financials using our software. We're going to use our stock analyzer tool to show you what you could be paying for these stocks moving forward. I trust Paul and Mo with my life. I want to mimic what they're doing in this world, the way they invest, because they've been flossing for years, and you can too. They'll provide us with a mindset. Let's get after it. Paul, what do you think about these companies that have fallen?
Thanks, Seth. So guys, first off, follow us on Instagram. Everything Money Investing is our new Instagram account, growing like crazy. And then also follow us personally, because we're having a competition to see whose ego can get larger. I'm currently leading by a mile. So just try to help Mo, Seth, and I increase it.
Thank you, Paul. Keep going.
All right. So
we talk a lot about these stocks who've been overpriced, and we've always said on the show, Paul, that when they come into our wheelhouse, when they fall, which everyone says you're always crazy for saying this has to fall in half, and sure enough, PayPal, Square, and Twitter have fallen a bunch. So let's take a look at them.
So I'm going to go pull them all up in our Everything Money software. So I'm going to go 8 pillars. First one, PayPal. Second one is Block, which is also Square.
I don't like that change.
You don't like it?
Yeah, no, I don't like it.
Oh, I keep forgetting it's Block.
Keep going. There you go.
Okay, and then what's the last one? Twitter. Okay, so, wow, look at this. PayPal, back in July, it was 308, hit an intraday high of 310, and now it's currently 176. Ooh-wee.
Oh, my God.
All right, so let's go to the 8 pillars real quick. Oh, so look at this. PayPal. So
come on.
It's still massively overpriced. Everything else is a check, guys, which is awesome. But it's still overpriced. Now, when we have X's on the valuation metrics of the PE and the free cash flow, does that mean we don't buy it, Mo?
No.
No, what does it mean?
Just means we need to figure out what it's worth.
Yes. So if a company is growing 30% a year, if 2 companies are exactly the same, company A, company B, everything's the same, but company A is growing 30% and company B is growing 5%, which one would you pay more for?
30%.
Absolutely. It's an absolute fundamental idea behind value investing. Don't buy into your excuses that value investing is boring and doesn't take into consideration growth. Growth is one of the most important aspects of value investing, right? Because I have bought pieces of real estate that on the numbers as is, I would have paid 30 or 40% less, but I paid full price because of their potential growth, because I saw the rent growth potential in that property. So when I hear people criticize me saying, you don't understand growth, no, you just don't understand English, which maybe we should have have subtitles below for moron. It should be like a moron subtitles.
Remember, Key and Peele would do that for the president. Remember, remember when Obama?
Remember that.
Oh, he would stand right next to Obama and like give like the street term of what Obama was really trying to say.
Oh, that's funny. Was this at the Correspondence Center?
One of those, yeah.
I love the Correspondence
Mo,
Centers.
I'm with you though. Sometimes Paul throws it to you like without knowing, and you're just like you're kind of frozen there. I get this all the time,
especially when it happens once every 6 weeks.
Well, I'm trying to interact with us as a group here.
So Paul, so you're saying
I can't carry the entire show.
Show us the stock analyzer for PayPal.
So guys, now what we do here is we created a stock analyzer tool because every investment is the present value of all future cash flow. We don't know the future. We have to make assumptions about growth in the future. Stock analyzer allows us to do that, where it might tell us that a 50 price of free cash flow is okay. So for PayPal is going to be around a while. So let's go to 10 years. Now, so from some revenue growth numbers, I'm going to go 8, 12, and 16% revenue growth. Profit margin, I'm going to go 14, 16, and 18%. Free cash flow, I will do 20, 22, and 24. PE, I'm going to go 13, 15, 17. Remember, guys, the larger the company is, the lower the PE is, because it's harder to grow when you're large versus small. Final thing, desired return, I'm putting 12.5% in. Why is that? Because you can invest in an ETF, do zero work, and make 9 or 10%. So in order to have a proper margin of safety and to give yourself something worth buying an individual stock for, 12.5%. I hit the analyze button. Okay, we're getting close on the very highest end.
Current
we have
price
a low
is 176,
range, 50 to 70 on the low range, and a high range of 130 to 175. Okay, so
Paul, before we do this 3 times with companies, I want you to be clear as you're watching. This is the price you need to pay for this company today to get the said return for the next 10 years?
Based on the assumptions I put here.
Right.
If I change those assumptions right now, let me just go to the top and change my revenue growth to 10, 15, and 20%. All of a sudden, our highest level, and even pretty much our highest level, it's in the sweet spot right now where you can buy it. But it all depends on your assumptions. Don't put unreasonable assumptions to give yourself the reason to go do this. Go do your research to understand what assumptions you need to make.
Well, unfortunately, Paul, too, is you have to be careful out there. There are people whose channels do really well just being incredibly overly positive about all this stuff. So if you're watching episodes where they're going to be overly positive, this is going to keep making an insane return year in and year out, they may very well be talking.
Do you want me to be overly positive?
Or talking our viewers into buying this.
All right, ready, guys? Here's overly positive.
That's much more fun, Paul.
20, 25, and 30% revenue growth.
It's great.
And then PE, I'll do what the moron in California does.
Well, it's 42 now. Just, keep it way up there.
30, 40, and 50.
Great.
Okay,
Boom.
you're stupid not to buy the stock today.
Great. Buy it, baby.
Buy it today.
I mean, that's it. That would, Paul, that would give us so many more subscribers, hundreds of thousands
there you
more.
go. I just told you to go buy the stock. In fact,
boom, I feel
on the high
fantastic.
end, it's worth $1,200 today, worth almost 10 times more.
It's a Ted bagger already.
So guys, the whole point about doing that exercise is to say it's all based on your assumptions. The question is, are your assumptions good or not? Whenever somebody sends me a real estate deal and shows me their Excel sheet with all the assumptions, I go, great, I'll show you assumptions that make it even better deal.
How many real estate deals has your partner, Andrew, looked over?
He looks at hundreds a year. Guys, I am being sarcastic on a lot of the things I say. I'm being funny when I say people are morons. Well, I'm trying to be funny. I do think that is the case, especially with investing. I'm not one of those guys who says everybody's a moron when actually, when it's actually you being the moron. Like cancel culture. Like everybody I've heard talk to says they hate cancel culture, yet cancel culture still exists, right? Even the liberals I talk to.
I just canceled you for saying that.
Yes. Even the liberals I talk to think that cancel culture is getting insane.
Yes.
But we still have cancel culture, and it's becoming even so bad where Black Friday, which is based on the profitability, companies going in the black, is now being banned because it has the word black in it. So why don't we just cancel black? Anyhow, the point I'm trying to make is a lot of this show is about sarcasm, and I am calling people out on things. But this is exactly my point of it, is you go and go believe those hypesters on YouTube who make ridiculous assumptions. I can make every stock in the world look like, I always used to tell people, I can make every real estate deal in the world a great deal. Just give me QuickBooks and I'll just make some numbers up. No different here. But the question is, are our assumptions reasonable? Let's go to the next company.
Square. Now, these are somewhat in competition with each other, Paul, and there's so many apps now, I can't even keep track. The Cash App, the Venmo, the yada yada. I'm sure there's a bunch more.
Yep.
But Square, we both use. I like their terminals. You go to a lot of coffee shops, they use Square. Tell me about this. Look at this fall from Grace.
Look at this fall. A high of 288. It's now at 130. That's over 50%. So guys, you guys would have told me back in February, Paul, there's no way the stock is going to fall in half. Come on. There's no way it falls in half. I mean, look at this chart. There's no way. Guess what? Look at that ride.
Back to where it was in July of
this thing rode what was that?
It's back to where it was July of 2020.
Gotcha. I rode this like I rode your mom.
Okay.
Also sarcasm.
Okay, Paul, you're on a roll.
He did not ride your mom.
I did not ride your mom.
Not yet, though.
Not yet. Okay, this is the 8 pillars, guys. A lot more X's here. Got a lot of debt. Looks like, but the free cash flow is probably pretty low. It's probably it's a fast growing company, so you got to remember that. That weirdo
Dorsey,
he started Twitter and this one guy. That guy's a weirdo. 425 PE, 196 price of free cash flow based on 5 years for both of them. Increased shares. Let's go to stock analyzer tool.
Yeah, I can't wait to see what this one comes up to.
Okay, let's go 10-year. Mo, give me your numbers.
Hold on.
Mo's going to give me revenue growth numbers.
Oh my. 15, 20, 25.
Okay. Profit margin.
Why is that profit margin so low, Paul?
It's really bad.
Should I go based on that? There's no way. There's no way.
I don't know.
It's a payment processing company. How is the profit margin that low?
Let's go 10, 15, 20.
Okay, yeah. I was going to say 15, 20.
Free cash flow?
Same.
PE?
Go 16, 18, 20. Same for free cash.
Same with free cash. And we'll do our 12.5% again. Analyze. All right. If you believe these numbers, which remember, he also did profit margin here of 15% when it was 2.1% in the last 5 years. So I would believe in Square. No, sorry. Yeah, this is Square, right?
Square.
Go understand if their profit margin can be equivalent to PayPal.
Mm-hmm.
Because if it can be, then they're just probably spending a lot of money getting users right now. And this might be a buy right now. It might actually be a buy.
Yeah.
Right? But you have to be really believing in a lot of the future and what it's growing to.
A lot more.
Say that again, Mo?
You got to go understand this one a lot more. Read the 10K if you want to do something with this. Don't just go based off of numbers. Because I look at that profit margin, and that screams to me, what is going on here? But if there's a reason for it, cool.
Yeah, so we have to understand this profit margin immensely because it doesn't seem in line with PayPal.
It's a car company?
That was sarcasm. Why doesn't Tim get mad at Mo for sarcasm there?
Because he's so dry with it, Paul, you know.
Why isn't Tim calling Mo out on this one?
You know, Paul, I look back at our video from Square.
It's a car company.
It's funny. I look back at our video from Square from 5 months ago.
Yeah.
And I forgot that Kathy Woods was also in love with this. But in essence, people in the video were commenting. There are actually a lot of positive comments, but you did say at that point that this needed to fall in half. And other people said in the comments like, I don't want to hear this, Paul. I want to hear about stuff I can buy. So the concept of buying is exciting. So every time you say, people get frowny face when you say this has to fall in half.
Well, but here's the problem. People want to buy and they want to see immediate result.
Yes.
So everybody wants their cake and eat it too. I want to buy and then immediately stock goes up. That's not the way it works. Think about investing in general. It's hard. You have to be patient. The investors who do the best are the ones that lack FOMO and are patient. Even if I told you to buy the stock today, if it didn't go straight up, you'd be pissed.
Yeah.
You would be upset.
This stock was $290 in August.
Was it in August, really?
August.
$290?
Now it's $127. Oh my God. And this is the most disruptive company in the whole world.
According to Kathy, does Kathy Wood still own some?
I mean,
please look it up, Seth. How much does Kathy Wood still own?
Okay.
Because that's an important aspect of it.
Square was almost like, to me in my mind, was like the start of this disruption of these big companies that are actually good companies. And then everybody fell in suit. But Square was like the big one back in 2017, 2018.
Dorsey just drives me nuts.
He's a weirdo, man.
Yeah, actually at the moment, all 152 combined ARK investment holdings, Square is their 8th holding.
8th largest?
8th largest holding. Jesus. So, yeah.
Okay. Next, Twitter.
Yeah, Twitter. Tell me about Twitter. Now we did these, Paul,
Mo,
because both of these companies, Jack Dorsey stepped down. So
yeah.
I guess the comments might read that they just fell because of that, Mo, and
that's always that's the excuse. That's like what we talked about in some of the videos that we made yesterday about COVID was the excuse.
Twitter, by the way, I remember at this point here in 2014, a marketing guru told me I didn't understand investments and that Twitter was going to be worth way more than $50, $60 a share it was selling for. Literally right here. Where'd it go?
Nowhere.
In February, the stock was $80.
Now, what did it do in revenue in 2014? The same time this moron said something. 2014, it did 1.17. Now it does 4.8 billion in revenue. Up almost 4 times. Actually, 4 times, exactly. A little over 4 times. And yet this guys, morons. All right. Let's go to the 8 pillars for let's see the 52-week high. 80 and now it's 37. Sick. Oh, look at this. X marks the spot.
Oh, we're almost home on all X's.
Revenue growth and net income's only up 185 million in the last 5 years, even though revenue's up 2.37 billion in the last 5 years.
Wow.
Sick. Okay, let's go to stock analyzer tool.
Oh boy.
Yeah, scam. Tim said scam.
Boy, guys, we're trying to find you stocks you can buy at home, but these are still ugly. I mean,
guys, this is the analogy I get. 52-week low means nothing. If my house is worth $2 million and I put it on the market for $10 million and it doesn't sell, but I drop it to 5, would you be like, that's a screaming deal? No, it's worth 2. It's still worth 2. Whatever car you have right now, quadruple the price, ask for it, cut it in half. Is that a screaming deal? That's how fools look at things.
Well, it sounds like one, Paul.
Yeah, it does. But fools don't understand the fundamentals. They're morons.
Don't be one. Don't be one of those.
Don't be a fool. Okay, Mo, give me revenue growth numbers for Twitter.
12, 15, 20.
12, 15, 10, 20 or 10, 15, 20?
10, 15, 20.
Okay, profit margin?
579.
Okay. Free cash flow margin?
Trying to base it off the 5-year, I guess.
I'm so confused.
I am too.
How about 8, 11, 14?
Sure.
PE?
16, 18, 20.
Price of free cash flow? Same thing?
I guess make it the same, yeah. I just look at that profit margin again. There has to be something that Twitter and Square do the same of because there's no way.
Okay. We have one price that makes sense on the very highest level of discounted cash flow. We have a low of $6 to $10 and a high of basically $30 to $45.
And my high was 20% revenue growth.
Yeah, which would make it over in 10 years.
Yeah.
So 1.2 to the 10th power times 4.8. It would make it $30 billion in revenue. Is it possible? Sure. But guys, Twitter, I mean...
And my profit margin is 9%, which it doesn't look like they've done.
Which they haven't done. In the last 5 years, they've done 5% a year in profit margin. So. I don't know what to tell you. You tell me, guys. Seth, what do you think?
You know, when Tim and I discuss potential videos to record, I get excited when I hear that some of these companies are at their lowest stock price in a long time. And then when they are still so out of the range of what we think value investors should be investing in, I can feel it. If you feel demoralized out there about, I just want to buy, the concept of buying feels so fun.
Buy an ETF. So guys, remember another thing. Just like Microsoft was the company back in 2000, and then it was untouchable in 2011 or 12, I was buying it like crazy in 2011 and 12. These stocks will eventually someday be at a buy position. It'll probably have to involve a fall and fundamentals getting better. It'll be a combination of both. But it will happen because people will get frustrated. The reason I like looking at these videos when we do the 52-week low, because I know what's going to happen. They're going to drop so much. They're going to drop over in half, and I'm still going to look at it and say overpriced. But at least now it's not coming off a big upswing. So people aren't going to be like, Paul, it doesn't even fall in half. It's not going to happen. Now it's like, oh, shoot, it fell in half. How much worse will it get?
Yeah.
And that's what we need to have happen. These are good things to happen. I will be a buyer of Tesla someday. I'll be a buyer of Amazon someday. I will be a buyer of every company right now that we think is overhyped. As long as it's around in business, at some point, I'll probably be a buyer of it. Because what ends up happening is people get frustrated not getting a return, and they'll just start dumping the shares, just like ARK Investment. Look at ARK. ARK Investment, the ARK ETF. Look at this one. ARKK ETF.
Oh, boy.
Look at this chart. Where's the chart? Oh, let's just go to... Oh, we have it on our Everything Money software. 8 pillars, ARKK. ARK Innovation ETF. Look at this thing. It hit a high of 159.7, and today it's at 77.68. And that high was in February. Isn't it weird that all these highs are exactly in February?
All February.
Now, the argument, Paul, is we call ourselves long-term investors, but we're looking at a one-year chart. And
and this could easily double. You're 100% right. But what I will say is, this company said disruption was the key. Why would it fall in half? Has disruption suddenly stopped?
When the S&P went up over 20%.
Oh, yeah, and the S&P, and by the way, these disruptive companies that now all of a sudden Kathy Wood says, no, you don't understand. It's all about the long term. Well, wait a second. Why is she selling these shares now? Why is the S&P up over 20% and this thing's down in half?
She's selling more shares of Tesla.
She's selling more shares of Tesla. And it's not even shares to honor redemptions.
So in essence, folks, is what we're trying to say is she's falling out of love with the companies that she was promoting the whole time. And so that's fine. But in essence, some of these companies still don't even make any money. And so why do we say all this? We want to be a lifeline for you out there. We want to be that one channel that everybody hates because they always say, patiently wait for a great deal. Be like Manesh Pabrai, who manages $1 billion and makes about 5 transactions a year. And he currently owns 3 companies, one of which we think is overpriced. But the point is, folks, is we want to be that lifeline, maybe a contrarian view to everyone else out there looking for clicks. Yeah, so in the end, if you want the software behind Paul, you can get all the data you've been wanting your whole life. You can get that stock analyzer tool to help you make predictions moving forward. It can help you with options. And of course, you can always trade with Mo in that glorious Bitnax Nation. And Paul, you and I started day trading last week in Mexico, and it's very exciting, especially if we do it together. Bitnax Nation, be prepared.
On $500,000, I'm down $9.
I love it. Look at you flossing. Bitnax Nation, be prepared because all 3 of us are going to sit down in the near future and go live as Mo shows us how to trade so you can follow along. That's our take. Fondle the thumbs up. Stay tuned. If these companies fall even farther, we might be buyers. We'll let you know. Thanks for watching.